Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to another edition of Forecast Update Live, a video series from EverAg Insights where each month we'll gather to discuss our dairy market forecast. I'm your host, John Spainhour, and I'm joined today by Erica Medke, Matt Gould, and Tracy Mobley. To get us started, Tracy, please give us a run through of the highlights of this month's forecast compared to last month's.
Sure. Thanks, John. As we were thinking about the forecast for this month, we agreed that not a lot has materially changed for the consumer. Demand is still hanging in there, but vulnerable even as we head into holiday demand time. There's been a bigger shift on the supply side. As of the latest milk production report, we added another month to our streak of less milk than last year, making it 13 months in a row now. Add to that USDA's June revision, taking it from 1% less to 1.7% less milk, and revised cow numbers down as well. And we still have lingering HPAI impact. So we have less milk and less cow power to make milk. So with that kind of a supply situation, we have raised our forecast across the board. We've raised cheese and butter by as much as 20 cents in the near term. And we've also increased powder through the end of the year as well, about a nickel. And as we continue to see production focused towards high protein whey and less dry whey being made, we've increased whey as well.
Thanks, Tracy. Every month, we ask our panelists to take either the bear or the bull side of the story. This month, Erica has agreed to give us the bull side of the story. Erica, take it away and let us know what you're seeing out there that seems bullish.
Hi, John. Thanks for having me back on the panel. I think I have the easier side, as we've heard from Tracy mentioning the forecast numbers. The team's consensus is that we will see things move higher. In general, I would say the current environment is feeling a little bit short. Europe appears to be the epicenter of that shortness, but here in the US, I would say it's still feeling a little bit tighter this fall than it has in previous falls. So I'd say, again, the big theme in terms of the supply side is where that shortage is coming from. As Tracy had mentioned, this isn't really a demand-driven rally. It's really on the supply side. So as we think back to what's causing that, producer margins were a little bit light earlier this year, and the delay from that till now is certainly a economic signal from those prior months. We're seeing some disease pressure here in the United States. Avian influenza was just discovered in California for the first time. Continued to see that spread in other parts of the United States. In Europe, they are experiencing an outbreak of blue tongue virus, which from the outside and from the reading the news stories appears to be worse than what's going on with the avian influenza in the US. And just generally feeling a bit tighter with feed poor in Europe. That's led to lighter components. So unlike in the US, where we are seeing more solids in the 100 weight of milk, in Europe, they're actually seeing about flat milk production and a cut in solids. So again, we're in a supply-driven shortage situation today. I think as we look ahead through the holiday demand season, consumers don't like to curtail their spending. We would anticipate that these market prices will remain fairly strong. I'm not sure buyers were expecting to see $2.20 cheese or $3.20 butter. Here we are, and in a buyer's shoes, you've got to buy. So I think that will keep some strength in this market. And again, as you look to 2025, we know there's going to be more capacity coming online. The question mark is still, will the milk be there?
Thanks, Erica. This month, Matt has agreed to take the bear side of the story. Matt, take it away and let us know what you're seeing out there that seems bearish.
Thanks, John. I want to start talking about demand. The demand situation globally remains very subdued, and that might even be overly rosy to call it that way. If we look at global dairy demand and you aggregate up all the global dairy trade, we've struggled to post hardly any growth at all. And one of the reasons for that is China. I think you can look no further than there. In their domestic market, they've seen dairy demand get beaten very hard. We've just had recent earnings reports from the regions, with some companies reporting their fluid milk sales volumes down 10% or more. And that's a result of just the economic headwinds. If we go and look at home, the food service sector has continued to face headwinds, and we have not seen a very good domestic demand environment. That means that this rally that we're experiencing today is less about it being a demand rally, or maybe not a demand rally at all, but totally a supply rally. And if you're going to be a bear, then all it takes is to have supply come back online. In our shop, the argument is about when. When will we start to see a growth return, and then to what magnitude? We've done our best to add up all the greenfield dairy farms around the country that are being built alongside these new cheese plants that start to ramp up around November. And then the question is, well, what about not greenfield farms, but just additions onto existing farms? As Tracy said, we've had 13 months of supply contraction. There's this psychological tendency to take the current situation and extrapolate it into the future. And I think that's wrong here. We will have a milk supply response. If you look at the futures curves for feed costs and milk prices, we believe we have the highest gross margins futures curve on record. So farm profitability has not only improved, but the futures curves say that you can lock in, which would be, kind of a record profitable curve. So there's a strong argument, maybe not so much about cow numbers coming online in September or October, but as we get into 25 and get deeper into 2025, higher on-farm profitability will create a milk supply response. And we do have all this new concrete and stainless steel in terms of capacity, which means that more milk will translate into more product. And so if you're going to be a bear today, which I am, it's all based on this supply response.
Thanks, Matt. Every month, we ask one of our panelists to give us something interesting to look at, or what we like to call our favorite look. This month, Tracy is going to give us our favorite look. Tracy, take it away.
Our look at European mozzarella prices takes the number one spot of our favorite looks this month. We flagged the relationship between European mozzarella and the CME cheddar barrel price as something to watch last year. And it's just been in such an interesting price chart to follow as it relates to where our cheese prices need to be for export potential. So why does this look matter for price and exports? The short answer, higher European prices likely raises the floor for how low our prices need to be to pick up exports, especially to contestable regions. Now, we clearly have a logistics advantage for export sales to Mexico, but our prices have to be competitive with the rest of the world to win in places where we might not have other clear advantages, like Asia. The EU and the US compete vigorously for mozzarella sales into Asia. And it seems the US gets an edge when CME cheddar prices are about 25 to 30 cents below the European markets. So earlier this year, when the European prices were near $1.80 per pound, the US had to get to $1.50 or less to win sales. And right now, the European market remains tight as demand is holding up well, milk supplies are questionable, and poor feed conditions have led to less component production, causing fat to tighten up and prices to rise. So cheese prices in the EU have been steadily increasing, and the recent rally has taken prices to $2.20 per pound. So that likely puts the US in the export game at something like $1.90, much higher than we needed to be earlier this year to win export sales.
Thanks, Tracy. I really appreciate that. And as someone who's been sitting in the seat that I sit for quite a while, that relationship between EU mozzarella prices and the CME barrel price has been very strong and very important, even though right now we probably won't see exports against our current spot price. I think what you're saying there is if we do move too much lower and the European price stays where it's at, that could open the door to more exports. That'll do it for this month's episode of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone on the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share us with a friend. We'll see you next month for another episode of Forecast Update Live.